Sorry there, Rick Emmett. Good evening, everybody. Welcome to the Sunday Night Strategy session for the end of February, February 28th, 2016. Yeah, I know. One more day, the leap year and all that. But really, we're still at the end of the line here. So, first 2 months in the books. Amazing. Just yesterday that it was Thanksgiving or whatever. I tell you, time flies. Boy. Especially when you're getting old like me. I can't even imagine what it's like for Paul, who's much older than I am, and looks it, too, if you ever see his latest pictures. So I'm not going to do my usual Forex Factory stuff because while there are some economic reports to pay attention to, the real focus is going to be on Friday, which is the job numbers. The job numbers are due out Friday. And right now in the market, the Bulls have put in not a bad couple of weeks. Okay, since coming off the lows back in.
And not bad. What else could they have done?
I don't know what that means.
You're like, well, not bad. I mean, I would say not bad. I'd say, impressive, powerful, historic almost.
I don't know what historic means, but okay. We've gone up farther than this in this short amount of time. Look at the move in August.
Right. The difference here is you got a breath thrust that ranks in the historic category.
Okay. I mean, I don't know if I agree with that. So, I have concern.
You don't have to agree with it. That's the fact. I mean, it may not pan out like it did in the past, but the breath thrust that we saw off of this low has only been seen a few times in the last, 100 years.
All right. Well, I think that we're overboard on the short term. That's my opinion. I don't know if you agree with it, but I think that we are due more of a correction from here than a continued upside move. I don't know if I agree with Tom McClellan and Tom DeMark. Did you see those guys got a write-up in Market Watch this weekend?
I saw DeMark, it's so funny how they, the media's in love with him.
Oh, loves him.
Right before the low, literally before the low, I watched the interview. I think it was on Bloomberg, and he said the market's bottoming, but we're going down another, I forgot what number it was, 5 to 7%, then we're bottoming. And then we bottom, and then the media comes out and says, DeMark called the bottom. No, he said we're going to go down 5 to 7% first, and that's where he'd buy.
Right. Well, I mean, he's famous because Sack paid him $1 million a year, right? Wasn't that Yeah, Sack was paying him $1 million a year.
At least.
Yeah.
Just to be exclusive. I mean, the McClellan thing makes absolutely no sense. I don't get that one. I don't see how you're putting those two in the same class.
Who, me?
No, not you. I mean, the article, their work is nothing alike.
Oh, okay. No, I thought that's the point, Mo, is that two people from two different styles, like our style, me and you, are not really that far apart. But to put two people from two different styles calling the same thing, I don't know. I think that it's not valid, but it gives it some more validity that, hey, it's not just this crazy guy who used to make $1 million or whatever he used to make to work for this greedy pig billionaire, which is just the perception. I'm not judging Mr. Cohn. And now he is what?
You can judge.
Well, I'm not judging him. Good luck to him. He earned it.
Go ahead, why not? He judges you.
He's what?
He'll judge you.
Okay, good for him. That doesn't mean that two rights don't. Do you teach your kids that two wrongs make a right?
No, but I teach them that two rights made an airplane.
Yeah. So, and I think that's what they're showing, that, hey, not only is DeMark saying this, but McClellan is saying this as well, and that gives it more, the variety gives it the more validity. It's not just one guy seeing it. I don't know. Look, that's why, in my opinion, they lumped them together. right? It's not just him, it's, him and him. So anyway, no, I don't know if we're going into a catastrophic bear market. If I can talk, it would be nice too. Bear market. I'm not saying that, but I do think we're due a rest here. I thought Friday's candle with the gap up and then the give up. I mean, it doesn't look like much on the surface, but I don't know. I guess we disagree. You think we're going much higher here? IBD called it with the follow.
No, I don't think. I think this conversation began because you said, I guess the Bulls are. I mean, it's been from a breadth standpoint in a stark run from the low, and that's not an opinion. I'm not saying I feel that way.
Okay,
I'm saying,
okay. All right. Okay, fine. But
like, looking right in here, you had one, two. I mean, price wise, these three, this move here, the three gaps alone like that, given the price move, is a star. And then you couple in the breadth thrust, how many stocks are up and down in the day, and the percent of volume going into them. Now, you could easily dismiss it by saying, well, the uptick rule was changed in July of 07, and that makes it easier to have these kinds of readings, and I'd agree with you. But you can't deny what happened.
No, you're right. You're absolutely right. There's no way to deny the facts. But to me, I always look at big moves in momentum against the trend as fading opportunities. In this case, it's a downtrend. So it's all right, we're due for a pullback correction. If this was an uptrend and we had a sharp move to the downside, it's a buying up, right? So that's just the rules of following momentum. So I mean, I don't know. I don't know. Even though I would love to say I would agree to disagree, but I don't even think we're disagreeing here. I don't know what your opinion is yet.
I think it depends on your time frame and context, because you could certainly argue that, at least in the S&P or the Dow, that you have a short-term uptrend in place as the 20-day moving averages are now higher and are moving higher and prices above it. But I do agree. I mean, Friday's candle I didn't like Friday's opening, so I don't like Friday's candle. But you could certainly argue that similar to what happened here, where you had essentially two pause days, a little shakeout, you're due for kind of the same thing, and maybe it resolves itself by many days going sideways or a little bit lower and then going. But until we close below last week's low,
yes, agree. I think last week, yes, agree.
That would be a momentum changer from bulls to neutral.
Yes, I agree. I think last week's low, because that low, okay, that candle is the nicest or the biggest reversal candle we've seen in a while, right? If you go back a couple weeks, you could see a big green candle right across your blue line, right? If you go just back a couple weeks, but that's not a reversal candle. Wednesday was a true key reversal, right? We gapped down and we traded low, and then we hooked. It's either a key or a hook. I don't know which one it is, but they're basically the same thing, right? It's either a key reversal or hook reversal. That's a big candle, in my opinion. And I think you're right. I think unless we break out of Wednesday's low, which is last week's low, whatever you want to call it, yeah, I definitely agree with you on that. That's going to be key. And if we take it out, we could go back to the lows. That's how powerful I think.
Yeah, I have a different take. To me, it's down. It's a little further. But I think if you start closing back below the middle of this trading range, then I think not only do we take it out, but we'll go down a couple of thousand Dow points.
Right. Okay.
But I'm not willing. I can't. There's very few data mined historical studies, given the action off of this low, that point to a breaking of this low anytime soon. I don't think there's a likely scenario where we run and then we come down, break this low, hold a little bit below it, and then go back up. I think if we fail and start to come down beyond the middle of this range, not only are we going to new lows, but we're going to smash through these lows in kind of grand, glorious crash-like fashion.
And the
But
Bears,
I don't think that's the scenario.
right? Okay, but the Bears.
I think
But you think if
we pull back
the
and
Bears,
go.
the Bears would finally be right? All these people that are calling for the end of the world here.
Right. I think, know,
Not that it's the end of the
the
world.
Bears have been. I mean, to be fair to the Bears, they were definitely right after the October rally that that could not gain. And the Bears really began to get some force in December, and then clearly the January collapse was good. But I think what you're referring to is some kind of sustained multi-year move to the downside or a multi-quarter move to the downside, which we have not seen since really 08. The 2011 decline of 20 whatever percent, 21% was really a 2-week decline.
Right. No,
So,
bear market's 18 months, right? Or I mean, not exactly, but
well, cyclical. I mean, I always look at it like a cyclical bear market lasts 3 to 12 months, and then besides a number of other factors, a secular bear lasts more than a year. But doesn't really matter to how you label it. It matters what kind of action and trading you take. But this, you have your double bottom is finally confirmed, and now you've got a crummy candle on Friday. So that's why it'd be really interesting to see if the Bears can make any meaningful progress. I don't think so, but we'll wait and see. All right, we're done for the night.
it's up to you.
What do you want to do, Mike?
I want to record my inner circle video, and I mean, that's it, I think.
Okay.
I don't really have a lot of.
All right, so I'll bang through this.
I want to get a cherry fruit pie, but I should.
No, I do.
What?
I do not.
Why?
I'm so grotesquely stuffed from the weekend.
Yeah, I'm fat as anything again. It's terrible, man.
And it started with Terry's 40th birthday during the week. We went out, and then it just bad all week.
Ugh, so horrible.
So,
oh, wow,
next Sunday night we got to chat because I'm going to be in out west, so I got to figure out timing on this.
Well, where are you going to be? California?
Yeah, I'll be in Lake Tahoe for the weekend, and then I'll be in California Monday, Tuesday, Wednesday. You're welcome to go.
Wait, you're going on vacation or for a thing?
No, I have work Monday, Tuesday, Wednesday, but I'm going to ski in Tahoe Friday, Saturday, Sunday.
So what does that mean? That means 5 o'clock is 8 o'clock.
I don't know if Tahoe's on. Is it 2 hours or 3 hours ahead? I can't remember.
3 hours. It's 3 hours.
3 hours?
Yes, it's 3 hours.
Okay. All right, so we'll have to coordinate.
Well, I don't know. What do you? Why don't we do it now?
Well, I'm not sure. What is the time zone? Oh, it's PST. Okay.
Oh, it's California.
Right. I'm not sure
California splits. It's not like that Indiana. It's not Hamiltonville where everything is.
Right.
It's legitimate. Tahoe is Wittenville, right? Yeah, that's where they are. They're in
Nevada
on the California side now.
I'll text you.
I really don't think you will, but I think we should decide this before you go away. So, all right. Anyway.
Well, but I'm not leaving Thursday night. I have like an 8 o'clock flight out of Kennedy. It's fine.
All right. Text me when you're done, in case I'm not here. Bye.
Okay, later. Set this up, and we are going to go. Really nice week for the Bulls last week. Nothing going on in the futures right now. They're essentially unchanged. But it has been following the script that I've laid out on my blog as well as here, so nobody can say, well, you didn't say that. I didn't think this decline was coming for sure, but since the January low, we've done a pretty good job. The lines in the sand are clear. We stay above the February high Bulls are in control. We go below the February lows. The bears are in control. In between, it's a toss-up, but really I'll divide it into the halves of the range. Upper half of the range, bulls. Lower half of the range, bears, just not with high conviction. So we had a nice breakout on Thursday. Friday was a crummy day on the candles, and the leaders. What interesting about Friday was the leaders got belted. Telecom, Staples, and Utes got belted on Friday. Let's start with the Dow. Dow, S&P, mids all look the same in the short term, although the mids look weaker intermediate term. Stochastic overbought, first time overbought since the rally began. Usually that amounts to nothing. You get a brief pullback, and that's it. Look what happened coming out of the October low. We got overbought, and what we do, we just bolted higher, 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 higher. Let's see what happens now. We're overbought. Nasty candle on Friday. See who wins. I think at best you're looking at a mild, modest pullback before another run higher. S&P, same thing. On the Dow, I think 17.5 is the target of the double bottom. On the S&P, I think it's something like 2080 up in here, which would fully retrace the whole 2016 decline. So that's where the target is, right up in here. Mids, the short-term pattern looks similar, but if you compress the charts, the mids are certainly weaker than the Dow and the S&P, pattern-wise. I have not done my homework on percentage rally off the lows, but I can tell you that the Russell's been leading, which we're going to pull up right now. So the Russell looks crummy down here, because look at this. And the Russell's been down since what, June of last year, July of last year, battered and beaten. Looks awful. But since the low, the Russell is leading. Since the low, the Russell is leading. That's a good sign, yes, but the first rally off of a low is always the most beaten down bounce. And then you have a pause and the real leadership emerges. We're not at that point yet. Here are the Qs. Also weaker like the Russell, and they can't get above their February highs yet. So let's pull up Europe. How does Europe look? Downright crummy. Still can't get off its arse. Still lagging. Europe. Emerging markets, on the other hand, have had a really nice run off the low. Last week, they pulled back. They're a couple of days removed from really showing some nice short-term leadership. Anything I'm dying to do in emerging market space, I'm not. I went through every country on Friday, and a lot of them look the same. I know some of you guys like Russia, which is here. How does Russia look? Kind of like the U.S. market a little bit. Ugly Friday candle. I don't think we saw the peak already. I think we're going to pull back and then go again. Let's see, Brazil, nothing. All right, let me just look at the questions really quick, and then we'll forge ahead. Yes, Burwell, I agree. Russell performing really nicely in the rally, which I'm glad because I've been stuck with it all year. Well, I'm not stuck with it. I made the decision. Okay. Let's see. What are the questions? Is S&P at flatline resistance at 195? Frank. I think you're referring to this line that I drew. It's a simple high of the February move. I wouldn't call that flatline resistance. I could put that line anywhere. I just put it because there was a single data point top right here, and it's actually above it right now. So that it should act as support. Jason, regarding breadth, what am I looking for? So let's just look at, for a momento, un momento. Let's go to the AD line. I mean, this is a pretty powerful move in the AD line off the low, just like you saw in October, but you didn't see it off of the August bottom. But we really rocketed higher in October, and now we're doing the same thing now. That's healthy. Common stock only, still pretty good. Still got a pretty good move here on the AD line. That's what I'm looking at. The volume AD line, I don't know how to pull it up on stock charts and e-signal. I never learned that kind of advanced stuff. Japan. Here's without hedging the currency. I mean, Japan looks kind of funky. I don't know what to make of Japan right now, other than we're having a really good bounce off the low. But this whole thing looks like kind of a mess. So I'll reserve any kind of. I don't have strong conviction, so I'm not just going to make something up. But it needs to settle down, and vol's got to go down and kind of clear itself out. Okay. Oops. All right. 3 key sectors. Trannies, which I've said many weeks in a row. In spite of people calling this negative, I said don't count them out because how decimated they were. If they weren't this decimated from a year and a half ago, I'd have more confidence that this would lead to another leg down. But they're bouncing really nicely, and they are, I think, the leading sector off of the low. So that's a positive. Banks, on the other hand, cannot get out of their own way. Nothing more to say about that. They cannot get out of their own way yet. Doesn't mean it's going to stay this way, but there's no evidence yet. Discretionary looks like the S&P. A little weaker during the decline, but you've got an island reversal down here. You're trading above the February 1 peak. Not as nasty a candle on Friday, but it looks like the market. Retailers are a little bit weaker because they've been decimated for so long. It's the first time in a long time they're showing any kind of outperformance. The builders are kind of the same as the retailers. They got beaten up worse than the market, double bottom, and now they're certainly leading in the very short term, being above their February peak significantly. But nothing really exciting there yet. Industrials, on the other hand, we've spoken about because the dollar has been weaker, and it's allowed some of these big companies to get off the mat. This looks like the transports, doesn't it? Can be a little stronger. But this is not any kind of significant high. Watch this. So the industrials peaked early, just like the transports, and now they're rallying off the bottom early. So let's keep an eye on those for possible signs of leadership. Materials just still stink. They bounced nicely. The key here was they never had a secondary low, what the market did down here, but there's nothing. They're kind of going back to market performers, nothing there I want to get excited about. Healthcare, nothing. Pair of twos. Biotech still, cannot get off the ground. I have not done any fundamental work in the biotechs. My only comment is I'm going to call this the Hillary Clinton indicator. The weaker the biotechs, the more likely it is she wins the election. Although I saw this guy professor from Stony Brook on TV last week who supposedly has called every election right, what did he say, 25 years? I forgot what he said. But he said with 97% certainty Donald Trump's our next president. Which was shocked to hear that. I thought for sure he was going to say Hillary Clinton. Let's see. Energy, boy, XLE still can't get out of its own way. It's not bad, but it's not leading and not great. And OIH, same thing, not bad, not great. Airlines, nice run off the lows, 20% rally. So you can't argue that. They really haven't had a pause at all, the airlines. So that's certainly one to reckon with going forward. Solar, nothing. Nothing going on there anymore. And the leaders. Oh no, hold on a minute. I'm all disheveled here. Let me go back to the regular sectors. Stocks we didn't cover. The semis, they look kind of like the market, much lower low, and then they had a very good rally, but really nothing to write home about leadership-wise. Jeez, I forgot what he said. Software, I do not like this at all anymore. As I'm been magging for 4 or 5 years, this does not make me comfortable. So, on software. Telecom, which was a leader, hung in Friday, where its brethren did not. Telecom, we've talked about it for weeks, has been a leader, is a leader, and should continue to lead. Telecom. Let's see, what else did I miss? Oh, Staples got crushed Friday. I own a lot of Staples, as you know. That is one fugly candle right there. That is ugly, and that's at an all-time high, which makes it even worse. So that is the first sign. Here's the weekly. You have a doji at the new highs. Don't like that at all. So I am certainly on guard here. Utes, also an ugly candle on Friday. I own the Utes, a very tiny piece, which I did a nice job of buying down here. But that was a really ugly candle on Friday in the Utes. Whoops. Come on. Inverted hammer in the Utes. These still look like they're going to all-time highs, but that was an ugly candle. Maybe we need to have a pause for a couple of weeks in the Utes. Okay, I think I covered all the major sectors, and I'm going to pause for a minute, look at questions, then forge ahead. And Dimitri, I will get to natural gas. Do you think that if the market averages put in another lower high in below that of November 3rd, the bulls are in trouble, Burwell? Yeah, I don't think about they're in trouble, but November 3rd. Oh, yeah. So Burwell's question is, what happens if we put in a peak below this peak? I think we're going to. I think this rally is going to peter out in this range, so somewhere up here, and then we're going to roll over again. We'll see when we get there, but I would argue that when we roll over again from 2080, we do not make new lows. We retrace half the rally, maybe back to where we are now, and then we can go. So I don't think it's, at this point, because of how good breadth is, I don't think we're going to rally and then just collapse to new lows. That would not be one of my more favorite scenarios. Okay. Let's see what else on this chart. Junk bonds, which I did buy for the record, and I own J&K in size. So here at junk bonds, they have made an absolute vertical move off of the low. Is this the move I've been talking about for God knows how long? Too early to tell. Gun to my head, I'd say no, it's not. But you can't ignore this huge move off the low. And the plain vanillas, here's the PIMCO one, also is putting just a phenomenal move off the low, but did the same thing here, and it failed. And the same thing here, and it failed. And a beautiful run here, and then it failed. That's the one that killed me? Yeah. I owned it. I probably bought it in here, wrote it up, got a little cocky, and then gave back all my profits. Nice job. Okay, so that's that. To cover the AD line. Okay. TLT is consolidating nicely. I said up here you have an island reversal and just a parabolic move, but the Bulls are hanging in well. I got to give them credit. So we have a Nasdaq on Wednesday. This is the week. If the Bears are going to make headway in TLT, now is the time. So if you're short, you got to get this thing moving below this low here. And the yield in the 10-year, here it is. Looks like it wants to go back towards 190. See what happens. The dollar, again, for those of you who haven't listened to me for the last 2.5 months, this is the day that changed it all. As you know, I was very, very bullish the dollar on all time frames. After this day, I only am bullish on the long term, intermediate and short term. No, I would step aside. Really nice day on Friday after the better than expected GDP number that still kind of stunk. But we're right back in the trading range. This is really the range. So we're into the trading range. Nothing doing on the dollar. The yen, anything doing? Not really. The first pullback off is blast off. We're at the point of no return for bulls and bears. We're at the line in the sand. If it begins to go lower, bulls lose, bears win. You're probably going to new lows quickly. If it hangs in and begins to rally, you could probably get a run to 114. Ultimately, I still think the euro is going to 80. My buddy Dana Lyons and I were doing some rhyming on Twitter, I think Thursday or Friday, and my line about the euro was, the euro was once weighty, although by 2019 it'll be sub 80, which I still believe. The yen also began to pull back the second time. Again, intermediate term, probably neutral on the yen. Long term, I think you get another 25 to 50% lower. Loonie, nice run. Nice run, diverging from oil a little bit. Nice run on the Loonie, continued higher. And I'm sure Johanna is going to ask me about the Aussie dollar. I don't have any conviction whatsoever at this point in the Aussie dollar. And the pound, which I said in my forecast that I think eventually it's going sub 100, so back to parity. I think all these currency moves happen by the end of this decade. Sam, I do watch HYG. If you look at HYG and JNK, their correlation is above 90, so they're essentially the same instrument from a price movement perspective. I know the portfolios are different, but yes, I do. I trade both of them. I just happen to own JNK now. All right, let's see what else. We covered the currencies, the bonds, the equities. Let's go to oil, which I'm like stuttering. I don't like the two red candle lows, but yeah, nice. You're having nice runs, and you're beginning to put in a trading range, which is when commodities bottom, they bottom and go sideways like coffee forever. So what I wrote earlier was, whenever oil bottoms, I think you're going to get 100% trading range. Maybe it's 25 and 50 or 20 and 40, whatever the number is. So could this be the beginning of it? Yeah, sure it could. We could just keep going sideways for, I would love it if oil could stay in a trading range and go sideways for 5 or 7 years. That'd be great. Everybody's going to win in that department. Natty gas, we went from having a bull market back here that looked great, 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 great. I did not think we were going to collapse down. And frankly, the last 2 weeks have been just death. Looks like oil a couple months ago. So would I touch it down here? No. I think you got to wait for a meaningful break to new lows and then look for a reversal. But I was really surprised that this didn't lead to more on the upside. Now, copper also beginning to put in a trading range bottom. We know smart money's been long since before I had gray hair, but there's really nothing going on yet. Gold. I give the bulls some credit. I will have to, because they are doing an excellent job of consolidating. And Tiny were here, he'd say, yeah, this could be a little pennant forming. You know, the smart money has been shorting gold this whole time, this whole kind of pennant time. So if the bulls can hold on, fend off the bears, you get another squeeze higher. Again, I think gold's going to 2,500. I just don't think we started the move yet. I think this is like the fake out move. If I'm wrong, it'll be plenty of time for me to hop on board. Because silver does not look like this, as you know. Silver looks awful. So gold and silver clearly diverging. Oops. Into the grains. And there's really nothing going on. I mean, they're just boring us to death. Anything in wheat? Nope, zero. Anything in beans? Nope, zero. Look the same. This is how commodities bottom. They go sideways and just kill you forever. Corn, kind of the same thing. They're just going sideways. You want to be long or short? Nope, neither one. Not interested. Sugar, on the other hand, had a huge day on, I think, Friday or Thursday. Oh, sugar's big day. Monday. So sugar, we had double bottom put in and a nice little run to the upside. Do I think this was finally the low in sugar? I don't. I think ultimately it should retrace all the way back down. But it's a pretty good run. Can't deny that. Cotton, guess what? Nothing. Absolutely nothing. Frustrating. Fits and starts, no trend forming. Cocoa, after a big run, we're kind of rounding off at the lows. Anything you really want to do here? Me? No. And coffee, same thing. It's just dying. And this is how commodities bottom. They just bore you absolutely to death. This has been for a year and, what are we? No, we'll call it a year. We'll round. That's a year of doing nothing. Essentially going sideways, slightly lower bias. So there's not a lot going on in any of our markets. That's okay. What did I leave out? Internet sector, something else probably left out, which I still own. Thank God it's at least bouncing. Maybe get a little more bump to the upside and I can get out of this without a total embarrassment, which is what it's been. Okay. Any questions, comments, concerns, quibbles, queries? Quiet group tonight. You know, the Oscars is on. I like Chris Rock, but I'd rather have him on cable than on network TV. Questions, comments, concerns, quibbles, queries? Jay, I did cover JNK. What I said was I bought it. I own it. I think that junk puts in a decade, a 5-year bottom this year. I'm just not sure we've already seen that low. I'm not convinced that this is the bottom and we're going to head higher by that much. But I'm playing it. I'll take it and we'll see what happens. Let's see. XLP, who asked? Jason? Nope. John asked, when do I sell XLP? John, wonderful question. It depends on your time frame, but you could certainly sell it, now on last Friday's close. You can certainly look at an hourly chart and sell a little bounce. The stochastic still point lower, which would say that this little shelf for the last 4 hours is going to resolve itself lower, maybe another 1% lower early this week. So if you're looking to sell it, this is the time to sell it. If you think this is just a little quick pullback, then you wouldn't sell it. You would hold on and then add to it. Or let's see, what happens if we go to 0 or negative interest rates a la Japan? JN, that's a great question. I honestly don't know. I don't have an opinion yet because I don't think it's anytime soon. Markets are not prepared for it. Yellen floated the trial balloon. She's clearly starting to prepare for that eventuality. The banks suck. Banks are in trouble. I can't make a currency comment because currencies are relative vehicles. Depends what's going on around the world. But I would say that large cap dividend stocks would be the place to go. That's probably all I have to say on that. I feel like Forrest Gump right now. Obviously, bonds would rally dramatically. All right, let's see what else we got. Benji, XME. I just don't cover XME, mining and metals. Beautiful run off the low. No one's. If you're a gold watcher, you can't be surprised about that. Looks like some of the emerging market countries look like this. But it's been so bad and beaten. I'd want to see how it pulled back first before I get excited by it. Let's see, DBA. Whoever asked, I just clicked the screen away, but the question is option strategies with DBA in a range-bound environment. And clearly, you'd want to sell straddles if you thought the range would continue. I just don't know what the implied volatility is right now to even offer a comment, but it's just hard to believe that commodities are going to kind of collapse more from here. I think a nice scenario would be maybe it's the beginning of a range in the commodities. Buy weakness, sell strength, or put option trades on. Whomever asked that question, I can't argue with that. It was Mike. Yeah, I can't argue with that. If you're an option trader, it's something I'd look at. Gunter, I don't think Super Tuesday matters at all. It's pretty much baked in the cake. Hillary is going to put the fork in Bernie. Bernie will be burnt, and Cruz will win Texas. Trump's going to win everywhere else. So that's in the cards. Paul, what do we want to say over the next 2 weeks in the stock market? Financials do better, staples do worse. I own Staples, so not sure if I want them to do worse, but I get your point because they have a nasty day on Friday. Staples and utilities are defensive, and you had a nice economic number come out on Friday. The question is, are we going to get a mild pullback in the Utes and the Staples, or is this the peak? Gun to my head, this is not the peak. It's a mild pullback, but we'll take it one step at a time. Financials, you want to see them do something, right? And they rallied probably on Friday's better than expected, but still weak GDP number. I don't think the future of the bull market, or whatever market we're going to call this, neutral market, is predicated on the financials right now. Is XLE more interesting to you than USO? Are they both going nowhere? USO is a bad ETF because of the contango and backwardation in the futures market. So when you've got contango like you have now, it's just bad. It's a bad ETF to trade. But simple relative strength, XLE has outperformed so dramatically for so long. I bet you over almost every time frame since '09. Yeah. XLE, because the longer you hold USO, the worse you're going to do. I don't like USO. Rather have you own the futures. But also, I like if you own XLE, you can buy, the Exxons and the Chevrons and the bigger integrateds, and at least get some dividend to reward you while you wait. Orlando, stock questions go to Tiny. We don't really cover those here. Yeah, John, the bank balance sheets are very, very, very strong. But they're going down because, one, there's no more 4-time Fed rate hike this year. That hurts the banks because their net interest margins aren't going to expand. And two, you still have the problem with energy loans and metals and mining loans. And the junk bond markets are so weak in those areas. So that's why the banks are really weak, even though the balance sheets are really strong. But I don't think you're going to have default problems in banks. Morgan, Wells, Citi, I don't think they got any shot of having anything like '08. They got $2.5 trillion in cash. They're just not going to make as much money. Let's see, very well. Do you think if the utilities makes an all-time high, the Dow or the trannies will follow? I don't. I don't think, because I do think the Utes have a good shot at an all-time high. It's not far away, but look at the trannies. The trannies need really kind of a multi-year move. So you're talking about a move to roughly 9,500 from, where are we, 7,400. So let's call it 2,000 points. You need a 30% move in the trannies to get to all-time highs. You realize that's a multi-year move. I don't think that's in the cards anytime soon. And the Dow, you could make an all-time high in the Dow. It's 1,900 points away, but I don't think it's here. I think other things line up first. Yeah, Burwell, I think the bull market is over. The trannies, the banks, the semis. I think the bull market is over for those. Yeah, I don't think they're going to make new highs soon. I could see the Dow going on one of those glorious runs without them, but I don't think it's those. Diane, what would cause the Fed to go negative on rates? They decide they don't want to quantitatively ease anymore. Instead of printing money, they want to follow what Japan and the ECB is doing, and try negative interest rates. That's what would cause them. I mean, how we get there, you need much weaker data than you're getting now. The data's not great, but it's not. I don't think you're in a recession right now, and that's what I think the Fed would wait for. What about contagion from some European banks? Yeah, look at Deutsche Bank. I mean, Deutsche Bank looked terrible, right? Down from 36, down 50%. But again, U.S. banks sitting on $2.5 trillion in cash. Contagion doesn't matter. They got plenty of money to withstand almost anything the market throws at them. So that's why I'm not concerned about the U.S. banks. Here, Mike wants to know, JP's This is the only one that shows a reversal like this, and that was because that was when we found out that Jamie Dimon bought stock, which to me is kind of, well, on this date. He essentially took what he made last year and bought it in stock. Is that meaningful? Not to me. The guy's worth, I'm guessing, $500 million, $1 billion. So to put 50 million in a JP Morgan stock didn't really do it for me, but you certainly have an island reversal low here with the corresponding volume, but the banks just cannot get out of their own way again. Maybe we're putting in some kind of complex head and shoulders low, and they're finally going to catch fire later on, but I want to see them lead before I stuck my neck out on the banks. If the Fed tries negative interest rates, they better do it before a Republican is elected. Very well, I don't think it matters. I think all that talk about Republicans and Democrats, I mean, look what happened in 2008 when everyone said the Fed would never cut rates in an election year. Not only did Bernanke cut rates, they did about everything else they could as well. So I don't think so. And I don't think this whole audit the Fed will amount to a row of beans. I think it's good public posturing. I also, frankly, and you guys can disagree with me, I don't think the Fed is doing anything nefarious. I mean, there's all these conspiracy theories. So what? The Fed shows her balance sheet to Congress. So what? The Fed's still independent. When they bought mortgages, so what? The Fed made money. Nobody talks about how much money the Fed is making the U.S. government. So I don't think it matters if the Republicans elected. If the Fed's going negative on rates, they're going negative on rates. Oh, John, I didn't cover REITs. Thank you. I missed that one. REITs, not as nasty a day as the others, as Utes and Staples, but certainly not warm and fuzzy day on Friday. Now, REITs would be one where if we pulled back a couple of points, I'd be looking to buy REITs under 71. And I may buy REITs under 71. Okay, last call. Going once. Look at all these emails. Last call, last call, last call. Last call. Oh, Burrow said, well, the Dems had both houses back then. They don't now. I don't think it matters. I mean, even if you had a Republican president today and you had the need for negative rates, I'm telling you right now, the Fed they're not going to care who's in power. I mean, they can look when they drag Yellen in for the waste of a time 2-day testimony before both houses of Congress. So what? I don't think it's going to matter. I really don't. If they want to go negative on rates because they think it's the best thing for the economy, they're going to do it. And if Congress doesn't like that, the Fed will say then change the law. Do you think you'll be able to sell oil now? Internet. Oh, our ability to sell oil now. Well, it's not only oil, Jason. I just saw where the first tanker of natural gas reached some European country. I forgot where it reached. So we're selling oil we can sell oil everywhere, and natty gas is getting to Europe. I don't think it matters. I think it's all been priced into the markets anyway. I think oil will put in a low. Maybe it's in, maybe it's not. You get a 5, 6, 7-year trading range, and then you get the next decade. Oil is a buy to hold on to for a long time, because that will probably correspond with the dollar peaking. All right, I think that's it. I'm going to get my fat rear end on the couch and watch TV before I fall asleep. So thank you all for coming. Tanya and I will send an email about next week. I'm thinking now that it's a full 3 hours behind. I may just do it at 5 o'clock anyway, and then go grab dinner and then go to bed early, which is what I'm really known for out west. I'm a lot of fun out west. Get up early, eat early, go to bed early. In other words, boring. All right, thank you all for coming, and we'll be back with you next Sunday night. Be well.